Welcome to this week's live ASX strategy session. Thanks for joining me for another show. Terrific to have you with me. Plenty of interesting things to talk about this week with the stock markets, the commodity markets, new all-time highs in gold, uranium looking interesting. Lots of stuff to go through. And then also any stocks you'd like me to have a look at, get those stock codes ready. We'll go through those in the second half of the show. Always interesting to look at the chart structure for the stocks that you're looking at. As always, everything today, general commentary only, doesn't take your personal situation into account. Having been through all of that, let's jump into our first chart. And we will start with the ASX 200. And looking at this, you may think it's been a fairly quiet period in the ASX, but there are actually some extreme moves happening behind the scenes. I'll come back to this in a moment. And then over in the US, the S&P 500 has just had 5 up months in a row. I'm going to show you what that means historically for the rest of the year. I think you'll be surprised. I'll tell you more about that shortly. But before we get all that, let's start with this latest price action in the ASX 200. So the underlying price structure here, I think, is constructive. The ASX 200 has been trading around the 50-day moving average for close to a month. And that follows the pullback from the August all-time high. So we had the pullback from the high down the 50-day moving average, and then about 4 weeks of sideways price action. The fact that the ASX 200 has been finding support around the moving average, I think that's positive. It suggests to me that the dip is in fact being bought, and that this is then likely a consolidation within an ongoing bullish trend, which ultimately results, I think, in higher prices. Also note that this is also what we'd call a relatively shallow pullback. So prices have only come back about 4% from the high. So there's our high, about 4% back to the moving averages. Considering how far the ASX 200 has rallied in recent months, this is by all means a pullback of modest proportions. And as we often discuss, pullbacks that are well supported are positive, as it indicates that buying interest is underpinning the market. Essentially, it shows that prices are, I think what it shows is that buyers are still looking for a way into the market, and hence they've got their bids not too far below the most recent highs. Just looking at the price action over the last few days, prices have rallied off the 50-day moving average. So this is the strongest rally sequence that we've had since back in mid-August, when prices were trending higher and they were making those new all-time highs. And I think this indicates that the sensitivity remains to the upside. So it's the upward side where that sensitivity currently seems to be. It's interesting to look at what's happening in the materials index. So let me jump across. I want to show you that. So I'm coming over now to the ASX materials index. And what this is, so this is of course dominated by the mining stocks, and it's essentially been going sideways for the last 3.5 years. You can see this big 3.5 year range. I'm going to jump over to a weekly chart because it will show the range even better. So let me just quickly jump to the weekly. And yeah, so you can see this goes back to the mid-2000s. From the 2015 low, big upward trend, and then 3.5 years of just sideways price action. And so what I think here is that the materials index, I think it could be on the verge of a new trending phase. So just while we're on this weekly chart, what we can see, it's gone from being below the moving averages. So it swung from below. It's now above the moving averages. So that sets up the price structure from where we can get a bullish trend. Moving averages are also, the weekly averages are also starting to cross and turn higher. Coming back to the daily chart. Back to the daily, what I like here is that the price is becoming established above the moving averages. So it had a lengthy period below the moving averages last year and into the start of this year. Now it's flipped to the positive side, and that price action is becoming established above the averages. And then also just looking at the last couple of weeks, you can see this strong rally off the 50-day moving average after about a month of consolidation. So I think this is bullish price action, and the materials is a big part of the ASX 200. So I think this supports a bullish ASX 200 outlook generally. The other big part of the ASX 200 is the financials. And let's just come over and have a quick look at this. And what we have here again, I think it's a bullish price structure. Prices are consolidating. Well, they've been consolidating for a few months now. But what they're doing, they're consolidating along a rising 50-day moving average. I also like that the latest rally, see the rally we've had just in the last few days, it follows after, it quickly reverses this sharpish fall we had back towards the 100-day moving average about a week and a half ago. And we've got that strong rally off it. So again, it shows that sensitivity seems to be to the upside. So two big components of the ASX 200, which are doing positive things. Just coming back to the ASX 200. So as I say, those two big components of the ASX are showing, I think they're showing strong chart structure. So from my perspective, I think we should be positioned here for further strength. Timing is always another matter. I think the timing is less clear at the moment. I've been talking about the potential for this consolidation to potentially last longer, possibly several weeks. But it could just as easily, like with this rally we're seeing now, this rally could just as easily continue forward, and we're talking about new all-time highs next week. So is it more consolidation? It's completely feasible. We get another pullback and retest of the averages and more sideways before maybe that break higher, or prices could run sooner. I think one of the that's why, and that potential of prices running sooner, that's exactly why I want to be positioned for further upside, as we've been talking about over the last few weeks. It's been having that bullish positioning in place and the wide trailing stops to try and see off consolidations. I think one of the factors favouring more consolidation is the extreme moves which are happening at the smaller end of the market. So I'm talking about the small ordinaries and the emerging companies. I'll come back. I'm going to cover them a little bit later after the US section. I think whether further gains come in the near term, or whether maybe it's after more consolidation, like, we can never be sure, but that's not the important factor for me. For me, it's all about being positioned for the bullish trend. I think that's been the play. That's been the play we've spoken about since mid to late April, being positioned for a rising trend. And then from that perspective, well, I'm long the ASX 200 index, long the individual stocks. And again, I'm managing risk with those wide trailing stops. While I think the markers are all bullish now, at some point that's invariably going to change. We don't know when that's going to be, but the trailing stops, it gives us that exit plan. So we have that in mind now. When things are calm and doing well, we've got our exit already thought through. We're not waiting for calamity to hit before we go, oh, what should we do now with our exit? So always have your exit plan in mind when times are stress free. So okay, so let's jump to the US markets now. Of course, if you're getting some value from this, hit that like button, leave a short comment. Just tell me what you think. Are we going to get a longer consolidation, or a price is ready to move now, or is something else going to happen? A price is overvalued and we're heading for a decline. Tell me what you think. It's always interesting to see what other people's thoughts are. So, but hit that like button now while you're thinking about it, please. It helps heaps, because then YouTube helps YouTube know people are watching, and YouTube shows other people. All right, so let's jump over to the S&P 500. And well, the S&P 500, it looks like it's just completed another brief correction or a brief pullback. And then on Thursday, it's hit a new all-time high. I thought this latest consolidation may have lasted a bit longer, maybe long enough for the 50-day moving average to catch up, but that has not been the case. Like the previous pullbacks before this, or like you could say all the way back to when prices crossed above the 100-day moving average. All the consolidations have been shallow and short-lived. And this is why I believe we shouldn't mess around with a bullish trend. When prices are rising, I think it's about keeping it simple. Just, I want to be long. I want to own stocks. I don't want to try and, pick tops and get out and take profit and get back in. All too hard. People do that. I think more often than not, they miss that broader trend. That's where I think the money's made. And I think that continues to be the way to approach this. I saw some interesting stats during the week. So the S&P 500, it's just had its best September. It's had, its 14th, I should say, it's had its 14th best September ever. So the S&P 500 goes back to 1950. That's when it came into being. Before that, it was all about the Dow. So since 1950, the September we've just had, as I say, the 14th best ever. So it was up 3.5% for the month. Now, September is notoriously a weak month, and many people avoid stocks during this period. Sell in May and go away. September's one of the periods people think, oh, look, I don't know that I want to be involved in the market. I actually heard a local commentator saying that exact thing at the end of August. He said, look, our firm, we're just going to sit October out, or sit September out, I should say. I think what we've seen during this September, I think this is a good example of why we should follow the price action and not the calendar, because of course the trend has been up leading into September and it's continued to be up. So, follow the price action. Sure, be aware of seasonality. I am. If prices are looking vulnerable heading into September, that can be a factor. But when the trend is up, it's like, I think that's the thing that matters most. The other interesting thing about a strong September is what it means for the rest of the year. So this is the 14th strongest September on record. So what happened the other 13 times for the rest of the year? So October, November, December. Well, 11 of those 13 times, the market went up further. And then 2 of those times, the market went down. That was in 1973 and 2007. The average gain for the last quarter was 5.5%. So, it's interesting, isn't it? We've had these 5 strong months in a row. A lot of people would find that as a reason to be nervous, but that historical context tells us that there's a strong probability that we see higher levels into year end. Of course, there's no guarantee that will happen. What's happened in the past may certainly not happen again. But I think momentum matters, and it often persists. That's what trends tell us. Momentum often persists. I think the odds are favourable of higher levels, not a reversal. I don't think the reversal is what we should be looking for at the moment. Okay, so just coming back to the price action, I want to show you what's happening in the equal weight, because that's also interesting. So we're going to jump over to the S&P 500 on an equal weight basis. And what we have happening here, well, this has been a good week in the equal weight. Strong rally off the 50-day moving average, and that follows about a month. You can see this month here where prices just track sideways towards the moving average. Now we have the rally off the moving average. The equal weight has lagged the index recently. So during this sideways period, the S&P 500, of course, as we know, has been rallying. But this week's rally starts to move it back into sync with the index. It's also made a new all-time high, not by very much, but nonetheless, it is a new all-time high for the equal weight. I think from a structural perspective, the underlying conditions here, they remain bullish. So the key factors I'm focusing on are the rising moving averages, so the 50 and the 100-day moving averages, and price, of course, being above those moving averages, and this clear sequence of rising lows and rising highs. So they're all bullish markers. And as we often discuss, broad participation is typically a positive sign. So with the equal weight making new highs, that's showing broad participation. And so historically, that's a positive sign, and something which we see within healthy bull markets, where the trend can continue to build. One other thing, I'm going to jump away from the US just for a brief moment and just have a look what happened in Europe over the last couple of days. This is the Euro Stocks 50 index. So it's the largest stocks in Europe. It's just very interesting to see a breakout just in the last couple of days, and that follows 4 months of sideways trading along rising moving averages. And now we have that breakout to all-time highs in the Euro stocks. So I think that's another sign that equity markets generally remain in this bullish phase. Coming back to the S&P 500 just for a moment. So here we are, S&P 500. I continue to believe it's a case of staying long stocks. That's what's been working over the last 6 or so months now, and I think until there's good reason to do otherwise, that continues to be the play. The overall structure is positive. I think the path of least resistance is up, and as I say, until there's good reason to do otherwise, it's using those. It's staying invested, using those wide trailing stops to try and see off pullbacks, and in these situations, the dips and the consolidations, as we continually see, they're buying opportunities until the structure changes. So very interesting markets what we have at the moment, and that interest continues as we move into the small caps, which we will do now. We're going to do the small caps, the commodities, into your stock codes, all of that. And but of course, that wraps up the free section. So if you're not the strategy session member, there's a link below. Click that, come on in, doesn't cost much, costs you very little really for what you're going to get. And you won't get the live show for today, live next week if you want, but of course you get all the replay. So that's probably the thing to do if you like this sort of approach to the markets. All right, so over to the Russell. We'll start with the Russell 2000, which of course is the US small caps.